Monday rate update coming to you on a Tuesday, no doubt. Hope you're enjoying your Labor Day. I tell you what, it's going to be like 4th of July though this week because we have Jobs Week ahead. Yes, Jobs Week. And where rates are right now, we'll show you in a second. We could see rates go under 6% this week on VA. And my thinking is we're gonna see it. All right, let's get right into it. What's going on this week on the economic calendar? Monday, the bond market's closed, so nothing really happening. Tuesday's a pretty light start to the week, though. We do have construction spending and a manufacturing report. Thursday, we get our first jobs report. We get the JOLTS, the Job Opening Labor Turnover Survey. And the expectation is that we're going to see somewhere below 7.5 million jobs available. And we think those numbers are always a bit inflated, but that's kind of what we're going to see. Hopefully under 7.5. We'll also get a factory orders report, just again showing the strength of the economy. Thursday, though, that's when the fireworks begin. We got the ADP private sector payroll and jobs report. That is the private sector jobs report, and that leads us into Friday's big BLS jobs report. But also on Thursday, we have initial and continuing claims. Continuing claims, we're at like 1.95 million. We're still real close to that 2 million continuing claims marker. That will truly show that unemployment, once you lose your job, it's hard to get a new one. Friday, that's when we truly see the fireworks this week. We have the BLS, the Bureau of Labor and Statistics jobs report coming out, and the unemployment rate, that is the household survey. We think that it will go from 4.2% to 4.3%. I think it may even go to 4.4%. And here's why. We were this close from 4.2 to 4.3 last month, less than 1/10 of a point away from being a 4.3% last month. So expectations at least 4.3, possibly 4.4% unemployment, which would be the highest unemployment rate we have seen in the last 5 years, really since COVID started, when everyone got laid off. And that's going to be a big report. The other thing we're going to be looking at too is pay growth. The wage inflation. What do we see for wage inflation? All right, so let's take a look at the rates. Conventional, we're right around 6.5% conventional, so that's good news. Actually, conventional jumbo just under 6.5%. And VA, you can see we are 6.08 as we start the week. Remember, last year we saw rates coming down, and I do believe this is going to be the week rates get under 6%. You can see we're still a quarter point higher than we were last year at this time, and rates continued to go down after that jobs report last year. It really wasn't until the Fed met the middle of September last year that interest rates started to go up, and they started to go up because inflation started to go up again. And job market actually recovered and showed some real spunk and strength. So we'll see if that happens this year. And then last year, the Fed also dropped a 50 basis point drop on us. And we do think we're about 1.25 to 1.5 percentage points too high on the Fed funds rate. So really a quarter point, I think that's a good thing. I think it should be a 0.5 point, but we'll see what happens. And I think this jobs report will impact whether it's a quarter point or a 0.5 point drop in the Fed funds rate coming up in middle of September. All right, that's all I got for you. You guys have a great shortened work week. I love 4-day work weeks. We'll talk to you later.